GAINX and GAINX is one of the easiest assets you can trade. It's as easy as trading boom and crash. If you love trading boom and crash, you will love trading GAINX and PAINX on Weltrade. Now, I'm going to give you an amazing trading strategy that's going to help you become profitable on GAINX and PAINX. Now, this strategy today, you can use it to catch spike and you can use it to scalp. Now, I'm going to show you what I did to take this trade right here. Can you see that? You can see we are currently running in massive profit, guys. Massive profit. Okay, so firstly, let's explain how to scalp using this strategy. Now, in order to scalp using this strategy, you have to do a top-down analysis. Take note of that top-down analysis. That is, you have to start analyzing from the higher time frame down to the lowest time frame. Now, let's head over to the higher time frame. Let's go to the daily time frame. So, on the daily time frame, looking at the daily time frame, we'll be focusing on today's candle. Okay, we're focusing on today's candle, but the overall trend of the daily time frame is bearish. Can you see that? It's bearish, but today the candle is bullish. Can you see that? It's bullish. So we are likely going to have a lot of spike on the lower time frame. But when you look at this daily candle, now let me zoom in. Can you see that? When you look at it, you can see that currently it is having a retracement. That's what's forming this week, that long week right there. It's currently having a retracement, and that is the advantage I took to hop into that trade. Okay, after checking the trend on the daily time frame, okay, you have to head over to the H4. Let's look at the H4. We'll see the retracement clearer on H4. Okay, now look at the H4. So this is the H4. You can see, looking at the H4, you can see this shooting star right here. Can you see that? Can you see that shooting star forming right there? Okay, that is the advantage I took. Okay, that little retracement is forming. That is the advantage I took. Okay, so as soon as I saw that there's a little retracement on the higher time frame, I checked all the time frames. So after the H4, I went to the H1. So this is the H1. You can see that bearish candle right there for me, right? You can see that, right? So that is what you do. You check all the time frame right from the top to the lowest. Okay, let's see the M30. This is the 30 minutes. You can see it is also what heading downward. Also heading downward. When you check our indicator window, you can see that our indicator reached level 90 and is heading downward, right? So that is the advantage I took to hop into that trade. So thereafter I came to M5. It is on M5 that I got my entry. Now before I entered, I had to check, I had to look at the nature of the spike. Can you see it's been spiking all the way up and it made this high. Now after that spike made that high, the last spike right here did not take out this high. Can you see that? Let me zoom in. So you can see that, you can see these two spikes right here, right? You can see that the last spike did not take out this high. Instead, it is lower. It is lower. When you check it closely, you see that it's lower than this high. That is a lower high being formed, right? So that gave me the confidence that price is going to start towards going downward. It's going to start heading downward because no new high was made. Okay, so that is how I took this trade, using top-down analysis. So if you do your top-down analysis, get the direction of the price right from the higher time frame, you get a sniper entry that is going to make you stay long in the market. Okay, that spike is not going to knock you out when you are scalping. So even when you want to scalp, this is exactly what you will also do. So this is how to use the strategies for scalping. So you have to wait for indicator to touch level 90 right here. Okay, and it touches level 90 both on the time frame you want to take your trade, that is both on 1 minute time frame, both on 15 minutes time frame, both on H4. And so let's check the 1 minute. Let's check the 1 minute time frame. So you can see on the 1 minute time frame, you can see that price would reach the overbought level, right? price reached the overbought level and it started heading downward. So this is how to use this strategy to scalp. The main secret is to use the top down analysis, and it's going to help you stay longer in the market. Okay, I'm going to show you how to use this strategy to catch multiple spikes, not just one, a lot of spike. Okay, and to catch spike, there is a precaution you need to take. Okay, you can see that in order to scalp, when it hits level 90, immediately it starts going downward. But there is a precaution on the spike catching aspect, which I will tell you, I'm going to show you, so you don't end up running into losses before getting one spike. Okay, so let me show you how to use the strategy to catch spike. So in order to catch spike, I'm going to head over to like 30 minutes time frame. Okay, let's go to 30 minutes time frame. Now look at the 30 minutes time frame right here. Okay, so I'm going to mark this spot right here. I'm going to mark it out at this position right here. Can you see that? So you see that spot? That is when the indicator touched what? Level 10. The oversold level on the indicator window. That is when it touched level 10. Now, as soon as you see this happen on the higher time frame, it is now time for you to go to the lower time frame and wait for the time at which it will align with this. Okay, now let's go over to the 15 minutes time frame. You see what happened at this very zone right here. You are going to see what happened. And look at the 15 minutes time frame. Can you see when price got to this same zone? You can see that the indicator touched what? Level 10, and then it started spiking. Okay, so it started spiking. Okay, now let's go over to the 5 minutes time frame. Let's look for that spot. Okay, now look at it on the 5 minutes time frame. Exactly the same thing happened. Price was also hit what? Level 10, and then it spiked and started spiking all the way up. Okay, now let me show you the safest parts for you to get your entry. Now when price hits level 10, you don't jump in immediately. Okay, you don't jump in immediately. You have to wait for the first spike to occur. And when the first spike occur, you wait for when the moving average crosses over to this side. I'm going to delete this marking so you can see that. Okay, good. Now look, when the first spike occur, you can see the moving average did not cross over. You wait for the spike that is going to what? Bring the moving average to this other side. Can you see that? So when the moving average has come over to this side, that is when you are going to hop into the trade and catch many more spikes. Okay, now let me tell you the precaution you have to take when you want to get an entry for spike catching. If you do your top down analysis from the higher time frame down to the lowest time frame, immediately the indicator touches level 10, is going to start spiking. But there are times like this. Let me show you. Like this. Can you see this? There are times like this when the indicator hits level 10. Can you see it hit level 10 right here? But when you look at the price, there was no spike. That is because this M1 does not align with the higher time frame yet. If it aligns with the higher time frame, that is when spike is going to occur. So when you see that it hits level 10 and you can see it still crawls all the way forward down to this place before the spike started coming in. That is because the lower time frame did not align with the higher time frame. So in order for you to get a sniper entry that you will not have any loss while waiting for spike, you have to make sure that your M1 and M5 aligns with the higher time frame. If it does, you are going to have instant spike heading all the way up. So this is how to use this strategy to catch spike. Just wait for the indicator to hit level 10 and ensure it's aligned with the higher. You are going to hop into the trade and make massive profit. Okay, this strategy can also be used for trading boom and crash. Very, very effective. Okay, so let me give you the setup of the indicators that we use today. Let's head over to our indicator window. So these are the indicators we use for today. We have the moving average. Okay, we have the moving average right here. We have the relative strength index, and then the main indicator for signal is the force index. Can you see that? The force index. So let's check out the parameters of this indicator. Firstly, the moving average. These are the parameters for your moving average. Take a screenshot. Period 12, the shift is 0. The method is smoothed. It's not exponential, it's not simple. It is smoothed, okay, and apply to close. The levels, there are no levels. The style, you choose any color of your choice and then click on save. And let's check out the indicators on the indicator window. You have to click here to add it. So the relative strength index is period 250, 250. Apply to typical price. The levels are level 90 and level 10. Can you see that? The style should be your background color, okay? Should be the same with your background color. And then that's all. We click on save. Let's check the parameter of the force index. So these are the parameters of the force index. Can you see that? Period 40, the method is linear weight and the volume is tick. Okay, take a screenshot to apply to all time frame and then you add your style color, any color of your choice, and then you click on save. The indicators we use for this strategy to bring. So I want you to go over to your chart now and back test it. Test it and tell me what you got, okay? Tell me what you got. Tell me if it is effective as I have explained, and tell me if you were profitable using this strategy. So if you got value from this video, I want to hit the subscribe button, like this video, and don't forget to turn on your notification bell so you'll be notified when we post many more amazing videos. Thank you for watching. Bye.